Oh my God, busy week this week. Lots of rate change possibilities. Strap yourself in, keep your hands inside the cart, and put your helmet on. We're talking about geopolitically, we're talking about the coronavirus. A nurse on site in one hospital said there's 9,000 people that have contracted it. Another report said that there's 25,000 worldwide, and that is only 25,000 because there's a 14-day incubation period before we're even unknown. Millions could possibly be infected, and that has a worry for the stock market as trade will be affected and economies will be affected. Consequently, that's good news for mortgage bonds because investors pull their money from the stock market and are worried and move it over to mortgage bonds. An influx of money means we don't have to pay as much to get the money. Brexit's going to come to a head this week on the 31st. They've got to do a final vote and get that off the table. And impeachment news. That's becoming more likely that may happen as more news trickles out. The GOP is really going to be forced to bringing on witnesses. They can't just bury it, and that may not be good for the White House. We'll see what happens with all of that. Central bank this week, tons of news coming out. The Fed's PCE is coming out, a report later this week, which is the key indicator for inflation. We probably won't have any, but that's going to be watched. The FOMC meeting is happening this week on Wednesday. And we'll see what they have to say about interest rates long term. Domestically, we have a couple auctions happening. The Fed is trying to dump some debt. We'll see what happens with that. Watch those things. The first three, Brexit, impeachment, and coronavirus, are definitely probably the big indicators this week. Hey, when I can help, do give me a call.